XRP exists for precisely this reason. Paul Barrett, a highly popular YouTuber and self-described technologist, said so directly. I believe his channel has almost 1.6 million subscribers as of the last time I checked, and he is a strong supporter of XRP. I'll show you a post in which he discussed Ripple's strategy regarding XRP as a bridge currency and the competition, which is a competition from the quote-unquote bank coins that are currently available. Additionally, I'm going to use this chance to share an extremely old post with you. In essence, it is a 2016 declaration made by Brad Garlinghouse, the CEO of Ripple, and what's happening today is exactly what he said would happen, and it clearly shows how important it is for a cryptocurrency like XRP to serve as bridge currency, which is what it is now employed for. Thus far, it has been implemented for that use case. Additionally, people can complain that XRP hasn't taken over Swift and made it obsolete. To be honest, I have never held the opinion that XRP must or would accomplish that in order to succeed. Simply put, XRP will be utilized when it makes sense. Also considering that, well, XRP has been in existence for more than 13 years. As far as I'm concerned, cryptocurrency is still in its infancy. Therefore, the United States, which has the world's largest capital market, has only recently, less than a year ago in fact, January, when we elected a new president, become a pro-crypto nation. And it's a big factor that will influence people in institutions and corporations as well. There is still much to be revealed, but extract P up to this point is unquestionably true. It's simply still a clear early cryptocurrency winner. Okay, so this is Paul Barron's post that was shared yesterday. He created the plot twist for XRP. Was Brad Garlinghouse always working towards this? While Swift pitches neutral rails, all of the major banks are vying to introduce their own stable currencies. In actuality, JP Morgan Bank of America, Citi Wells, ING, Deutsche, Unicredit, and the U.S. consortium stablecoin, among 6 other companies. The CEO of Bank of America then quotes the Euro stablecoin by 2026. We're prepared to go live, that's the quotation. As soon as regulations are clear, we're prepared to launch. Banks don't want neutral infrastructure, he claims. They desire authority. Here's the worst part, though. Fragmentation increases with the number of proprietary systems, Euro, JPM, and Bank of America coins. The walled gardens are bridged by whom? XRP exists for precisely this reason. Now, people, that's just right. That would be a little different, though, unless you're referring to a stable coin that is traded on exchanges. After that, you can attempt it. It must, of course, be supported by something. Those would be centralized, of course. It simply depends on what is important. Ultimately, there will be some parts of the world where people will not utilize a coin that is backed by the dollar. Or not going to utilize it if it is supported by something else for geopolitical reasons. However, there is no reason not to use a jurisdictionless, neutral asset like XRP. Additionally, there are many who object about XRP's volatility, asking why it would be used as a bridge currency given its extreme volatility. I've always found that to be the most flimsy argument. In 3 seconds, XRP settles. Now check out the price of XRP. Has it altered when you look at it 3 seconds later? Very seldom. Furthermore, even with stablecoins, there is still some danger. Do you know of any stablecoins that you can peg? Because I most definitely have. Name it. USDC, Tether, etc. Coins to peg that are completely stable. Furthermore, USDT Tether is currently over $1 if you check this page on Live CoinRush. Though it fluctuates, USDC is exactly $1. For this reason, when you click on one of these, you can see that it's just kind of everywhere. Furthermore, it's not particularly volatile. Unless it's more significant to pegs, which doesn't happen very often, it's always about $1, but there's still a chance. What I'm trying to say is, who the heck cares when anything settles in real time? Therefore, it's a dumb argument to say that XRP isn't, ideally positioned to serve as bridge currency. As of right now, XRP makes sense because we do need to connect these walled gardens, which is precisely what's occurring with many of these banks. And because I'm actually filming this Sunday night, I thought it might be entertaining. I think this small Sunday night video would be entertaining. Take a trip down memory lane with this post. Brad Garlinghouse, the CEO of Ripple, wrote a brief essay titled The Case Against Bitcoin. Furthermore, this was released on August 24th, 2016, more than a year before I was even aware of XRP. He has already thought everything out and is executing the necessary tasks. As you can see, Paul Barron is discussing precisely what he contends here. You must build bridges across all of these walled gardens. This has always been a great fit for XRP. Thus, it remains true nearly 10 years later. Alright, this is the text of Brad Garlinghouse's article. The utility settlement coin, a new digital asset that UBS, Deutsche Bank, Santander, and BNY Mellon introduced, is intended to become the industry standard for blockchain settlements. After receiving approval from central banks and authorities, they anticipate that banks will begin using the token for post-trade settlement and clearing by the beginning of 2018. I must admit that this development is terribly misplaced, even though it indicates strong market traction for an institutional usage of digital assets. Only the banks that issued the digital asset may effectively settle disputes over it. There are then two possible outcomes. The first scenario: all banks worldwide accept the same digital asset, agree on its laws, and cooperatively regulate its use, putting aside geopolitical and competitive differences. SAT chance. In the second, more probable scenario, banks that are not part of the issuing group issue their own digital assets under other governance and regulation frameworks. And people consider that. By the way, he mentioned that it was happening back then. I'll read it through and return to his piece. According to him, it was played out in the past and is being played out now in 2025. If you don't belong to that group, you can issue your own coin while still using whatever the bank coin is. So how are those related? You must know the location of the trading pair for those two coins that are in competition with each other. Do you see this as a problem? That's precisely why you require XRP. It doesn't make logical that it can span all of this stuff. However, walled gardens will always exist, have existed, and will continue to exist, with some of them gaining traction. However, that's just one more reason why XRP will always be a good choice for a bridge currency. That's beyond question, isn't it? Brad then wrote, "We are already beginning to witness this." According to the Financial Times, the outcome would be a currency landscape that is even more fragmented than it is now, with Citi's Citicoin and Goldman Sachs' Settlecoin. Banks from various groupings of digital assets wish to settle trades with each other. They will need to trade their digital assets in a common fiat currency or create marketplaces amongst their distinct digital assets. What a mess! Therefore, that is unquestionably true. I was receiving that. Was there a trading pair for it, I wondered? To connect with all of this extra fragmentation, you must establish new marketplaces. By doing this, they are using more modern technology to recreate the same system. It's just absurd. It simply is. The second major issue with the utility settlement currency, he notes, is that it appears to be backed by a basket of currencies. It is no longer an asset until it is backed by cash. It's a liability. In the end, trading liabilities necessitates transferring money across international borders, replicating the current system but increasing friction. It's precisely what's occurring if it's the aspect of them taking this path that always made me laugh. You're introducing more friction while replicating what already exists. A walled garden is a walled garden is a walled garden, my friends. So even if there are some technological advantages with the speed of the technology, etc., you still can't avoid the reality that you're essentially producing the same thing. According to Brad, we firmly think that in order to provide truly efficient settlement, banks must have their own digital asset. And we think XRP is in the greatest position to play that part. It returns to the basics of what makes digital assets remarkable and distinctive. Anybody, anywhere in the world, can use them as units of value because they are universal currencies. Digital assets have a worldwide reach and can settle considerably more quickly than traditional assets because of its vastness and universality. That's what I was saying a short while ago. XRP has no jurisdiction. It can be used for any geopolitical reason. Certain coinage backed by specific fiat currencies should not be used for geopolitical reasons. That is simply a reality. Therefore, stable currencies have some degree of